Thank you for joining us today. This is Anupama Surush from EDH, and we have today with us Mehernosh Tata from Edelweiss. Thank you, sir.
Thank you.
So I believe you've spoken a lot about how there are digitally resistant customers today, and we have seen people moving on, finding it difficult to from physical banking to the digital landscape. So how do you believe digital lending will really serve those or attract those who don't want to go into the digital space?
Yes, it's a very interesting question, and you have a mix of customers who still want to be on pen and paper. However, we've seen the adoption being made by them. Very few people you would now see who don't own a smartphone or a phone, right? Over 600 million people in India now own a smartphone. And if you probably were to look at the real estate on their phone, you would surely see one of these platform apps where you can very quickly call for groceries or call for medicines or call for some other needs that you need. In their own way, these digitally resistant, I would say, customers have adopted technology because of convenience. And therefore, I do feel that if we are able to showcase products which can help simply give them an adoption, you will see a much higher adoption on those platforms. On lending, very clearly, can you make it more seamless? Can you make it a lot more frictionless for these small and micro enterprises so that they are able to do their core work properly and not spend too much time on seeking a loan or a finance for their business. If we are able to bring out more products that way, we will see adoption happening. A lot of data is already showing that payments are booming. Everything that needs to be done in terms of on the internet, a lot more acceptance has come in. And over a period of time, we will see these clients also slowly take baby steps towards getting comfortable and sharing their data. What is most important is to ensure that as custodians of their data, we safeguard that and ensure that that is taken only with the consent of the customer, and data being used is only for the purpose for which you are seeking it.
Right. And it's interesting that you mentioned that digitization is going to be something that everyone will be adapting. So, in terms of the government, do you believe there's some initiative that they are taking in terms of the co-lending space?
Yes, it's a very valid point you raised. Co-lending is one of the most progressive, I would say, circulars which has been released recently by the regulator. We have seen them actually being very agile, hearing the industry, both the banks and NBFCs, and coming out with a revised circular in November 2020. And it is squarely focused on the micro and small enterprises who are unserved and underserved in the economy. This partnership between banks, who really are the custodians of the liability, whether it is current account, savings account, and NBFCs, who are able to actually reach out to these end customers through their superior origination strength, ability to underwrite them in better manners than the traditional underwriting that banks would do, and of course then be able to collect. All of these three things combined actually is ensuring that we now reach out to last mile of those MSMEs who otherwise traditionally would not get lending. And therefore, this co-lending model, to my mind, makes it extremely capital efficient for the NBFCs. From a bank's point of view, they are able to get priority sector loans, and the end customer, which is the really small micro and small enterprise which needs the money, is enabled to get the money through this regulation.
Right. And one last question. In terms of adapting, how do you see the industries really benefiting from the increased digitization in terms of the lending space?
The way it works is, I think if you are able to do a lot more seamlessly, the way I look at digitization, it is actually an enabling tool. And whether you are a large corporate or for that matter, a small enterprise, is there a way we can help you do your work, help you get your job done better, faster, in a more economical manner, and last but not the least, probably with a lot more reduced error rate, right? Human errors not really creeping in. A lot of industries are using technologies. We clearly on the lending industry is fairly regulated. And despite that, we are seeing a lot of new initiatives being taken by banks, NBFCs, fintechs, and that is helping us go out and reach out to those set of customers using alternate data to be able to evaluate these customers and offer them financing. There are other industries which are using technologies differently. I mean, we all know about how the autonomous driving car and everything else that's coming in. So we clearly are seeing that the use of technology, be it blockchain, AI, Internet of Things, big data, a combination of all of this is being used by various industries ultimately to bring in a better customer experience. Thank you.
Right. I think that was very well put. Thank you so much.
Thank you so much.